You're watching this Forex Preview here at XM.com. Thanks for joining us. I'm Christina Marujos. With me today is lead investment analyst Rafi Boyajian. We'll be having a look at the Fed meeting coming up on Wednesday, the much-anticipated March meeting, Rafi, where markets are widely expecting a rate hike. However, the more intriguing part of this meeting might be the updated dot plot chart. As inflation has soared recently, it reached almost 8% in February with no signs of cooling, sending shivers down FOMC member spines. Therefore, what could policymakers signal on Wednesday?
So, Christina, like you said, it's almost certain that the Fed will raise interest rates by 25 basis points. I think this has been communicated fairly well by Chair Jerome Powell as well as some of his other colleagues. Of course, we know that some policymakers were calling for a slightly steeper rate hike path, but that's going to be really the attention, what's going to come after the March meeting, just because they seem to have settled for a cautious start to kick off the rate hike process doesn't mean that we won't be getting 50 basis points rate hike during this cycle. So naturally, there's going to be a lot of focus on how many rate increases FOMC members will be penciling in their dot plot chart on Wednesday. Now, before the crisis in Ukraine started, investors had priced in about 6.5 increases. We then saw rate hike bets being sharply pared back due to the threat to the global economy from the war. However, given the scale of the surge in commodity prices across the board as a direct impact from the conflict and sanctions on Russia, investors now think central banks will need to act even more aggressively to rein in inflation. And for the Fed, market odds have now crept up to almost 7 rate hikes for 2022. So clearly there's rising expectations that the Fed will be quite hawkish, but it's not all about interest rates because we're likely to get another decision on Wednesday, and that's on the balance sheet. Of course, we know the balance sheet soared as a result of the pandemic asset purchase program. The Fed will probably announce plans to allow its bond holdings to run off by not reinvesting in maturing bonds. There seems to be some mixed views among FOMC members about whether the Fed should put greater emphasis on shrinking the balance sheet than on raising the Fed funds rate. And there is a chance we might get some clues about whether actively selling its assets is on the cards by the Fed. Most likely, though, the Fed will proceed cautiously and simply lay out the pace of the balance sheet runoff. And we'll probably have to wait a bit longer to see whether or not actively selling asset purchases is on the cards by the Fed.
Let's also have a look at the dollar. It has been enjoying some safe haven flows given the geopolitical uncertainty. Can the Fed meeting boost the currency further at this point?
Well, we're seeing the markets beef up their rate hike bets going into this meeting. So that actually means that the Fed will need to be extremely hawkish if it is going to take investors by surprise. I think the main thing to note here is that Powell and his colleagues have repeatedly stressed that the Fed is more data dependent than ever. So I don't think they will want to commit to any sort of guidance that is too long term. It's also hard to see FOMC members signaling more than 6 rate hikes at this point because it's too early to get more aggressive than that. And that leaves the US dollar exposed to some sell-off because it's really rallied quite strongly over the past 3 weeks since the crisis started to unfold. Still, even if the new dot plot isn't as hawkish as expected, but Powell clearly signals that the Fed is willing and ready to act should inflation keep surging. I think that alone could bolster the greenback as well as boost treasury yields.
Rafi, thank you for joining me today, and thank you for watching this Forex Preview on the Federal Reserve Policy Meeting coming up on Wednesday here at XM.com.